Welcome, investors, to the After Hours show brought to you by Ticker Time News. I'm Adam. We have got a full episode for you today, but remember, this show is for you. Leave a comment with the ticker symbol that you would like us to go over, and we will dive through that ticker symbol, including price action for the day. We will also look at support and resistance lines. We'll look at chart patterns if there are any forming. We will look at quarterly financials. A lot of earnings were released today, including Docusign, Poshmark, Shift Group, GoodRX, many of them for us to get through today. We'll also look at any top news regarding that ticker symbol. So, the After Hours show is for you. Leave a ticker symbol in the comments, and we will go over that ticker symbol. We had a few requests come in late after the show yesterday, so we're going to start today's show with those ticker symbols. They include TAKOF. This is a Canadian drone company. That is the US market ticker symbol. There is also the Canadian market ticker symbol of FLT. So we're going to look at the Canadian market and the US market ticker symbol for that. And we also had another late request after yesterday's show, BLSB. We're going to look at that as well. So thank you for joining us today. And without further ado, let's jump into it. So I'm going to switch up my screens here for a moment. I haven't quite figured this out. This is show number 3 for us. So it's going to be a little messy just for a quick moment as we switch this up. Okay, here we go. All right. The first company we are looking at, this is a Canadian drone company. The company is called Drone Delivery Canada. And the US market, the ticker symbol is Takeoff, TAKOF. And that's what we have on the chart first for today. And then we're going to jump to the Canadian market for this company, which has the ticker symbol FLT. So for drone delivery company, they want to be the world's leading delivery drone expert. And they have some very fascinating drone technology for delivery. So you can see today they were up 1.9%, and we have a few boxes here. So let me go to a bigger picture, a macro look at this company, and then we'll scroll in to look at it more closely. So this company, for the past several years, has been in a steady decline, starting all the way back on the 1st of February in 2018. That's when this company reached its high. And since then, the company has been falling steadily over since 2018. But then, right here, right around November 2020, this company got a bounce, and it bounced hard and skyrocketed to the moon, reaching a new all-time high right here on February the 11th, and the all-time high is $2.01. The low this company has seen over the past 12 months is 35 cents. All right, so let's scroll in now and look at what's happening up close for this company. Now, you see this green box here that's going in an ascending pattern, moving upwards on your screen here. This is a kind of a support box for the company as it's been rising since the end of last year. Let's scroll in a little closer. I've got some 3 important lines here marked off, and we're going to go and switch this from a daily view to an hourly view to get a better close-up of what's happening. All right. So remember that green box I was showing you? You can see it going diagonally across your screen here. This was that support line for the stock as it was moving in the upwards direction, ascending. And you can see it bounces off of this box quite frequently whenever it comes and makes its lows. You can see it did it right here recently on March the 5th, where it came down and reached a low. And then again back here, and this was January the 28th, where it fell into this box for a low. It seems like this box catches the stock every time it falls, which is a good thing. It's a good sign that the company still has upward momentum. Now, the three blue boxes that you see here, these are very key support levels for the company. So the first line here, it starts at $1.12 and the top of the box is $1.16. This box is a critical support level for the company. The biggest reason being because it catches the edge of the green box right here where it fell down on March the 5th. And then if we go back to the left side of your screen and look at February the 3rd, you can see that it acted as support when the stock rose up and broke above the box. The stock came back down and this box caught it to propel it even higher. And then, of course, when the stock was coming down, this box caught it. Now, the second key area of support is the middle blue box, and that is from $1.13 up to $1.13. Well, it's no, excuse me, my apologies. $1.34 to $1.38. That is the next key and critical part for this company. And if we look closer at what's going on today, you can see that it stayed within this box most of the day. And then during the last hour, the 3 o'clock hour, it actually popped up out of this box. That is great to see. Now, what could happen? Two things. It could consolidate and maybe it's going to catch this box as support. So if it comes back down to fall into this green box, then we can extend this blue box out and you can see that possibly it could catch it and then bounce back off of it for a consolidation. Or since it's low back on March the 5th, it has been making a ascending move here, and it could continue up, which then we look at this third blue box at the top. This box is from $1.49 up to $1.54, okay? This box will be a critical test for the stock if it continues rising in this pattern that it's moving in, and this is mark this line that it's moving in. So you can see it's moving in a line like this, okay? So if it continues following this line, okay, by the time of around March 12th, maybe even say March 15th, if the stock continues along this line around that time frame, we may get it to start testing this upper box right here, and the low price of that is $1.49. That could act as some type of resistance for the stock. If we go back over here to March the 1st, it acted as resistance all day long on March the 1st. And then when it shot up the morning of March the 2nd, it fell back down. And then again, the second half of March the 2nd, it acted as resistance, holding the stock down. And we can also go over here to February 25th, resistance. Over here, February 23rd, resistance again. And if we go back a little bit further, we can see on February 4th, resistance. Right here on February 8th, resistance. So this line right here, this top blue one, has been resistance for this company so far this year. And the time frame where it did break above it, it came right back down below it. So It's critical right now that the stock has come out of the middle blue box, and the top of that is $1.39. Can it reach $1.49 and break through that resistance level? That's what we'll have to wait and see. And if it follows the same trajectory that it's on right now, that could potentially happen on March the 12th. So we'll have to play this one out and wait and see what happens. Okay. I'll leave our stock set up here for this so we can come back later in the future and look at this. Now, let's look at the Canadian side, the Canadian market for this company, and that ticker symbol is FLT, okay? FLT. Drone Delivery Canada. All right, now we have a similar pattern on the Canadian side for this stock. So first, let's go out and look at the big picture to see what we've been working with here. And you can see, just like on the US market and the Canadian market, this stock has been in a downward trend for several years. And then right here, a little bit earlier on the Canadian side, around May 20th, it had a run, it had a rally, and then it reached this bottom blue line here and it hit resistance, and that was at 95 cents. Okay. So, this downward trend for many years, it actually dropped 77.87% from its all time high. Okay. Now let's scroll in and look closer at today, at what's happening with it. And we're going to switch from a daily to an hourly so we can really hone in on this. So I've got several boxes here on this stock. And again, this is for the Canadian market for Drone Delivery Canada. And the ticker symbol is FLT. The bottom box right here is 95 cents to $1. This has acted as resistance for the company for a long time, okay? For a long time. We can go back right here, December of, 2020, it did break above it shortly for a day and then fell back down, and then resistance until we get to the 12th of January of this year, and the stock started to climb, all right? And it met resistance along the way. We have that marked out, so that way, as the stock has started to fall on the 10th of February, it fell to its lowest point on March the 5th. And now the stock is in an ascending trading channel. Okay. You see that here in this blue diagonal box. But yesterday and today, something happened with the stock. If you notice, it has stopped moving up. It's moving sideways now. And we can mark it off right here. All right, just put a line right here. This line is $1.77. The stock is running into resistance at that point. Okay. On March the 9th, it broke above that and then came straight back down the very next day of the morning of the 10th. And then it reached this box right here, this middle box, and found support. That was at $1.70. The resistance is $1.77. The stock is having a hard time right now breaking through this. So we'll have to watch this and see if it can, but this is acting as good resistance yesterday and today, okay? If it can break above this new resistance it's founding, the next box up here at the top, this starts at $1.90. Now, that has acted as both resistance and support along the way. Back here on February 4th, resistance. February 5th, resistance. February 8th, resistance. And then once it did break above it, it acted as support. You can see here on the 12th and then again on the 17th. And it acted as support on the last day on February 22nd, and then it broke through. It fell down. It melted down. Okay. All right. So we'll have to watch this company and find out. It looks like it's setting up a consolidation period right now. That's what it looks like. It looks like it's going to consolidate right here, no higher than a dollar 77 and no lower than a dollar 70. It might hang in there for a while until it gets some good news. As far as news go, the latest news we have is from March the 3rd. So there's not a lot happening with this company right now. They're not putting out a lot of information. So hopefully, something will come out of this. March the 3rd, Drone Delivery Canada down nearly 4% after providing drone testing update that didn't match expectations, okay? So that's why it fell. So the company is doing a lot of work behind the scenes that we should see pay off again in the future when we don't know when they will release any key information. Now, as far as finance goes for this company, the company hasn't been missing by too much when it does. I mean, you see here, this is the first quarter of 2020. It missed barely. It came in at a loss of 2 cents per share, but it had an estimate of a loss of 2 cents per share. There must have been some extra pennies hiding over to the side. This only goes out to the 10th place. And then here, the second quarter of 2020, it lost by 2 cents, and it was expected to lose by 2 cents. The third quarter of 2020, it lost by 2 cents, and it was expected to lose by 2 cents. There's consistency there, okay? They're not making or losing any more money. They're kind of flat as a company. That's not really something you want to see. And then we get to the fourth quarter of 2020. They lost by 1 cent, estimated loss by 1 cent. So they made progress from the third quarter of 2020 into the fourth quarter of 2020. And now we're waiting on the quarterly result for Q1 2021, and they have guidance of losing by 1 cent per share. So we'll have to see how that plays out. Now, annually, you can see right here in 2016, they had no revenue. They had net income at $2.92 million loss. Okay. The profit margin 0 because they had no income. 2017, no income, but they lost even more money, 8.36 million. And then we get to 2018, no revenue, and they lost even more money, doubling their loss to 19.6 million loss. And then we get to 2019, a loss of 15.6 million, no revenue. So this company has been building and building and building and testing. They've got to produce something of value. Otherwise, the company's not going to hold up, okay? It's got to start making some revenue. Think about Tesla in its early days, all right? It spent a ton of money and didn't make any money, all right? So we just have to keep that in mind. The stock's rating right now is at a neutral rating, not a buy, not a sell, just kind of hold and watch. And if we go to their website real quick and look at their product, I mean, this looks amazing, quite frankly, and it can carry quite a lot of load for itself. But let's just see. Will this play real quick for us? Drone in action. Uh, okay. All right. They're not showing us much there, but their drone is pretty neat indeed. You can see there just pictures. There's no action. happening. We watched the video and it just is the same video. Yeah, it's the same video. All right. So this company needs to produce something or it's not going to be able to hang around at this price level. All right, let's move on now to the next company, and that ticker symbol is BLSP, Blue Sphere Corp. Okay, so Blue Sphere Corp right now, they are a penny stock. They're at 13 cent. You can round it up to 14. Sorry, excuse me. It's at 1 cent, 0.01, and then 3900. So less than 1/3 of a penny. And if we go down to their profile to see what they do, transforms millions of tons of agricultural uh, and industrial waste into clean energy and other byproducts. The company was founded in 2007 and is located in Charlotte, North Carolina. Now, this company has a cool, very neat mission plan. All right. Because they say here, get this out of the way, turning endless waste into endless energy. That is something we need as a global society. We need this type of company. We have a ton of waste. We have too much waste, and waste is only growing and growing. I mean, you see here, endless supply for endless demand. They say 560 million tons organic waste generated each year, 50% growth, market growth over 5 years. $24 billion global waste to energy market. So they have a big market. They have a really good blueprint for a company. They just need to get their company into a process where they can take off. Okay. They're setting up behind the scenes, and you can see this kind of map right here where they have the different, agriculture and livestock waste, your city and town and county waste, state waste, and then waste from industries. And they're turning that into like a biofuel where they can, add it back to the soil to improve it for farming. They can add biomethane to fuel cars. They can use it to heat and run generators. So it's a really cool idea and a really cool setup. I like it quite a bit for what it's standing for and what it's trying to do. Um, all right, so not much there. All right, let's go back to the chart and take a look at this. Let's jump out to get a bigger point of view. So I'm going to go to the 1 day chart, stretch this out a little bit. So if we look here, you go all the way back right here. I mean, the stock basically did nothing for a while. It was flat. But then all of a sudden, starting on the 6th of January this year, the stock, it started gaining. It started gaining and then consolidated for a couple days, for a week at the most, and then it skyrocketed. Why did it skyrocket? So SEC actually suspends trading on this company based on social media and trading activity. So the SEC basically said this is a meme stock. All right. Not degrading meme stocks in any way, shape, or form. More power to you. I like it. I love it. But that's what happened. Okay. It became a meme stock. That's why it shot up. And we can measure this rise right here. Let's go from the bottom right here, January the 15th. And then it skipped over the weekend. And let's see. Can you get out of my way there? All right. Right there. It jumped. 894%. Oh my goodness, ladies and gentlemen. That was a huge rise. Excuse me for just a moment. Wow. 894% jump. Wow, that's amazing. But as they rise so quickly, they fall so quickly. Right now, with this company, would you invest in the company? It's really hard to invest in a company that's not doing much right now, but I love what the company is trying to do. It just needs to execute, okay? And since this stock was uh such like a, SEC says it's a meme stock. I don't know if I like using that term or not, but since it had the power of social media driving it, it's just really hard to map out and say, "Yep, this is support, this is resistance," because of that. However, as I say that, I am gonna add this little caveat to that. From the 15th of January to today, okay? I take that back. I take that back. This stock has stopped trading, literally. Let's pull this up and read this for a second. All right, SEC suspends trading in multiple issuers based on social media and trading activity. All right, so this is February the 26th, all right? As part of a continuing effort to respond to potential attempts to exploit investors during the recent market volatility, the SEC Securities and Exchange Commission today suspended trading in the security of 15 companies because of questionable trading and social media activity. Today's action follows the recent suspension of the securities of numerous other issuers, many of which may also have been targeted of apparent social media attempts to artificially inflate their stock price. The SEC continues to review market and trending data to identify other securities. Okay, yep, we got that. All right. Does it say how long though? All right. Suspension of trading in nearly 2 dozen securities, including 15 today. Nope, that doesn't tell us. Today's order states that trading is being suspended. Okay, we know that. But does it say for how long? And here it lists a whole bunch of companies. Under the federal securities laws, the SEC has suspended trading in a stock for 10 days and generally prohibit a broker dealer from soliciting investors to buy or sell the stock again until certain reporting requirements are met. So the SEC has literally stopped the trading of this company. Oh my goodness. I thought it was just for, during a day or 2, but no. They have since February 26th, they stopped trading in this stock. You can no longer buy or sell this stock from what I just read. And today is not February 26th. Today is March 11th. So, uh wow. So, we go look at this. This is just running the clock until we get to, where is it? Here we go. March 11th, right here. From February 26th to March 11th. Look at this. February 26th. This is crazy. This is absolutely crazy. Let's get this right here. So from right here, and we'll come out to the 11th. All right. The 11th, right here. This whole box. There's no trading. There's no trading. The SEC has stopped trading in this company. So there is no way to map out this company's stock performance uh, or patterns or where it might be headed. All we can do is look. I mean, look at this. The screen is blank. Since February 26th to today, there has been no trading in this stock. Blue Sphere Corp, ticker symbol BLSP. No trading. All because it got wrapped up and the suits said, wait a minute, this is a meme stop. This is a meme stunk. So we're going to stop the trading of this stock. This is incredible. I can't believe it. And this company has, there's a lot this company has going for it. I mean, there's a lot of waste in the world, and this company has a technology to turn that waste into energy, endless energy. Wow. Okay. So thank you for submitting that ticker symbol. I appreciate it. But unfortunately, there's nothing I can do for you in terms of gauging where the stock might go because they've stopped trading. The SEC stopped it. Okay, I'm repeating myself. I'm going around in a circle. All right. Anyways, thank you for submitting that ticker symbol and allowing us to dig deeper and find out that they've stopped trading on this company. And there are no dates set for when trading will resume that I've found so far. If you know, leave a comment in the comment section, letting us know whether or not you have found any information on whether trading can resume. Okay, let's look at a couple of other ticker symbols. Remember, leave hold on, I gotta make this messy just for a quick second. Hold on. Make sure uh leave a ticker symbol in the comments. Okay. I'll make it messy one more time. Just hold with me. All right. Leave a ticker symbol in the comments and we will go over it. Okay. This show is for you. Now, I'm going to dive into um, a couple of other companies. I've got Docusign reporting earnings today, Poshmark reporting earnings today, Shift Group earnings today, GoodRX earnings today, and Nano Dimensions earnings today. So what I'm going to do is we're going to start with Nano Dimensions, ticker symbol NNDM. Nano Dimensions. They do 3D printing and some pretty cool stuff. All right. All right. Hold. Give me a quick second. All right. Back with me. Okay, let's look at Nano Dimensions, ticker symbol NNDM, and find out how they did on earnings. All right. So they missed on, let's just do this right quick. They missed on earnings per share, but they beat on revenue. It's just, I've got all the other companies pulled up, but I did forget to pull this one up. Again, make sure to, all right, Nano Dimensions, transcript. All right. Yep. Okay. So Nano Dimensions, ticker symbol NNDM. Nano Dimensions, Q4 GAAP EPS earnings per share, a loss of 20 cents per share, and they were projected to lose 16 cents per share. So, oh, my apologies. I read that wrong. They missed by 16 cents per share. So that's not good. But revenue of 1.97 million flat year over year. So from 2019 to 2020 they did not grow, but they beat estimates by $970,000. So that's good. So estimates were that they would do $1 million in revenue, but they actually did $1.97 million in revenue. All right. So they say we ended 2020 with a strong balance sheet and 671 million in cash and bank deposits. Thanks to the equity offerings we concluded during the year because their stock had been going up, so they were able to do that. And we have strengthened it even more to a balance of nearly $1.5 billion as of the end of February 2021. All right. So they're talking about their balance sheet, how much cash they have. Shares shot up dramatically today. Shares in Nano Dimensions, wow, they've actually reached $11 during regular session. Nano Dimensions was up 18.34% today. After hours, they are down 1.7% to $10.91. All right. They had a low rate March 5th, March 5th at 11:30. This is crazy. If you haven't noticed it on stock charts, on March the 5th at 11:30, 11:20 to 11:30, it seems like almost every company that was down significantly all bounced at the same time. It was crazy. It's like all the suits called each other up on the phone and said, "All right, this is the low. We're all gonna push the buy button at 11:20 and buy these stocks because they're all dirt cheap." That's what happened. So when we go through the rest of these stocks today, you're gonna see that. So, anyways, Nano Dimensions. It's been a company. Let's shift this out to one day so we can get a big picture, macro, and then we'll zoom in. I just want to get a bigger look here, broader look. All right, so this is starting back on October 2020. And you can see before that, it was flat all summer long. And then starting in September, it started getting some momentum. And there's a slight pattern here where it goes up, it pulls back, it goes up, it pulls back, it goes up. And then we get to the 1st of December, and Nano Dimensions started to consolidate on this support line of $6.30 until December 17th, and it started on a rise. Okay, it started on a rise, but as soon as it rose, it consolidated for a couple of days, and then it fell. All right, so there was a gap up right here of 15%. This is when they announced the news that Dr. Eli David was joining in on Nano Dimensions, and that the stock gapped up. It reached its all-time high of $17.89 on the news of that, and then it consolidated for a little bit, a couple days, and then it fell. And this fall right here was 18.3%. That's how far it fell. And then it reached its bottom on March 5th, and now it's starting to recover. And it had an excellent day today because of the surprise revenue that they had. Okay, almost an extra $1 million in revenue. That was a big surprise. They did miss on their earnings per share, but they beat significantly, meaningfully, as you hear a lot of analysts say, on revenue. So that's what drove it up 18% today. Okay. So if we're looking for support resistance for Nano Dimensions, ticker symbol NNDM, let's go in to the 1 hour chart so we can get a better look at what's happening with this stock. So since it fell March the 5th, it's starting to recover and it's following this line right here. Okay. Now, yeah, it had the big jump today. So what it's doing is it's rising and then it has a small pullback. It rises, small pullback, rises, and then I would expect a small pullback, then rise again. All right. Okay. So support and resistance for Nano Dimensions. Let's go over here. Just take this line. This is 850. Let's pull it over. Hold on, gotta fix this. 850. This is a significant price point, 850. Okay. So this is significant for them. You can see right here when they were on their way down, when they reached 850, they kind of stumbled and paused when they were falling, okay? And it caught them for a moment, but since the whole market was pulling all of the stocks down, it was like a snowball effect. Once one stock started to fall and others in the same sector started to fall, then stop losses were triggered and then paper hands sold out and a big snowball effect occurred. And that's what helped to drive the markets down. And then the instability in the bond market with bond yields rising faster than they've risen in years that contributed to the snowball effect as well. So big snowball effect driving everything down. But if you were able to buy down here on March the 5th, you've got good entry points. So back to Nano Dimensions 850. Why is it important? It acted as support. It's acted as support in the past. It acted as resistance and support right here on March the 8th. And then it acted as support on March the 9th. And then when it tried to fall right here on March the 11th, it fell down to $8.83. So it was just a few pennies away from the line and bounced off of that. Okay. So this is an important line for Nano Dimensions. Now, since the stock is moving up, what's another important line? Right here. This is 1025. Leave that there for a second. All right. All right. 1025. Go up. Oh, back down. 1025. There we go. 1025. This is an important price point for Nano Dimensions. Right here, it acted as support and resistance, and that's common in stocks. Old support becomes new resistance. New resistance can become old support. It's just it's something very mathematical about trading stocks. And that's why being able to map out stocks on a chart is so important. So we've got this right here at $10.25. It's important. You can see right here on the 10th, it acted as resistance. Now, today, with Nano Dimensions rising so quickly, I would expect a small pullback. Is it going to pull back to 1025? It could. It's at 1089 right now. Okay. If it falls back to 1025, I would like to see this hold up as support for Nano Dimensions. All right. So that's Nano Dimensions. Let's jump into another one. Um, Anyone leave a ticker symbol in the comments? Otherwise, I'm gonna jump to another stock here. Okay, let's go to Docusign. I know a lot of people are interested in Docusign. So this is their Q4 and full year fiscal 2021 financial report review. I know that can get complicated sometime with the years. This is their end of the year for 2021, but yet it's only in reality March 2021. Companies can have their start date for the first of the year any day they want. They set it up when they're setting up the structure of their company. So that's why you can see a Q4 and 4-year fiscal 2021 financial report or earnings report, and it's only March 2021. Okay, hope that helps. So let's look at DocuSign. I hear they didn't do quite as well. So DocuSign says strong and consistent revenue growth. Okay, let's over here. Ticker symbol is DOCU for DocuSign. And let's just go to the earnings. All right. DocuSign earnings per share beats by 15 cents, beats on revenue. DocuSign Q4 earnings per share of 37 cents, beats by 15 cents. That's non-GAAP. GAAP EPS loss of 38, misses by 12 cents. Revenue of $430.9 million. That is a 56.7% increase over last year, and that beat by 22.95 million. That's good. That's a big that's good. That's good for DocuSign. Now, for their fiscal year 2021 guidance, okay? They're expected to turn this multi-million dollar company into a multi-billion dollar company in 2022. So their revenue guidance for fiscal year 2022 is 1.96 billion to 1.97 billion versus the consensus, what the street says, of 1.89 billion. Okay, so this is the year DocuSign says we're going to become a billion-dollar company. So can they do it? I think they can. So if we hop over to the stock chart, ticker symbol DOCU, DocuSign, let's see how are they doing. So DocuSign was up 5.9% during regular session, and they almost lost it all. They're down 4.5% in after hours trading. So what we have here are people, probably institutions, since it's mostly happening, as you can see here on the blue line. So this is happening after hours, the sell-off. That's mainly institutions doing that. And you can see a big spike in volume after hours as soon as earnings were reported. Even though the earnings were good, we still are having this sell-off right here. So anyway, DocuSign, let's go to broad picture real quick for DocuSign, and we've got broad picture support right here. And wow, does it line up perfectly. It's almost scary when that happens, you know? There's so much mathematics involved with stocks that it's so scary how predictable it can be sometimes. But if you look for DocuSign, if we go back to July of 2020, when DocuSign was consolidating in this box here between the orange lines, it March the 8th, March the 5th, it came down and it touched this orange line. The same orange line that it touched right here on the 9th of November, the same line it touched on the 18th of September, the same line in 12th of August, same line of 24th of July, same line of 13th of July, and it finally broke above this line on the 2nd of July. All right, so that's pretty cool. It's staying in that range. Let's see. Let's pull this line out. This was the resistance line. Let's see. All right, so this was the resistance line for it. So DocuSign, it still has a green candle for today because it was up 5.9% and it's only down 4.5% in after hours. So it still gets a green candle for now. DocuSign, when it runs up and hits this line right here at $230, it likes to bounce around it, okay? And you can see, let's clear the screen for some of this stuff here. Let's get it out of here. We don't need it right now. All right. All right. There we go. Okay. So DocuSign, put this one more line in right here from this candle over to this candle. This kind of acts as a ascending resistance line for DocuSign. Whenever it bounces above $230, that's when it usually makes its run to get all-time high, or run again all-time high, run again to all-time high. But when it can't break above $230, that's when it will consolidate inside of this box, okay? You can see the consolidation inside this box. So it breaks above it, comes back in. Can't break above it, comes back in. Here we had this giant, big news, giant uptick right here, and then a giant sell-off all because of earnings, where they missed earnings by 549%. That's a big miss, and that's why you have the gigantic sell-off right there. How much did they lose? Let's see. We can measure it, put it on there, bring it down to the bottom right here. They lost 34.7% in this fall after earnings. So DocuSign doesn't have a good reputation around earnings because you see, here's earnings again, and it went all the way up here. It came down to right here. That was 15.8% fall after earnings. Let's look at one more and see again earnings. Not such big of a fall, but it fell. So there's a pattern forming. Earnings and DocuSign falls. Earnings, it fell. Earnings, it fell. Today, earnings, it's down 4.5% right now. All right. So this is what, excuse me for one quick minute. All right. So DocuSign, excuse me. DocuSign revenue by the year, fiscal year 18, fiscal year 2019, 2020, 2021. So you can see it's been rising and rising and rising. It's revenue. Their subscription revenue, and that's where they get a lot of their recurring income from. So you want to see their subscription base growing. Uh, Fiscal year 2018, 19, 22, I'm sorry, 20 and 21, and then revenue, contribution, subscription versus professional services. So right now, 95% of their income is from recurring subscriptions. That's what if you start a company, one of the best types of companies you can start is one where you have recurring money flow. That is the best type of business you can create because you don't have to worry about where's the next revenue point? Where's it coming from? Who's the next customer we can grab? But you can become complacent in the subscription system because you're dependent and you're counting on that revenue to continue to come in and come in over and over each month or quarterly or annually. And you can become sloppy with your customers. So you have to be careful with that and not let that occur. Okay, strong growth in billings and revenue. Billings are on your left side. You can see going from quarter four 2020 to quarter four 2021, and it's risen. Revenue, same thing. Uh, strong revenue visibility. Okay, average contract length. This is important for subscription-based companies like Docusign. Dollar weighted 32%, 68%. Okay, so we have less than equal to 12 months, greater than 12 months. So 32% of their customers stay longer than 12 months. That's the number you want growing. 68% of their customers are there for less than 12 months. You want to see that number shrink and you want it to go over to customers who are there longer than 12 months, especially for a subscription based company. All right, now large and growing customer base. Total customers uh, been growing in everything. Last year was a big deal. That's when we had that nasty pandemic, and companies say they had a 5-year plan to go digital, right? Well, 2020 caused many companies to take their 5-year plan to go digital and compress it to 1 year. You have to go digital and switch it over in the matter of months instead of taking that 5-year roadmap that you had to go digital. So a lot of companies struggled with that, and a lot of companies were forced to go. And that's what helped companies like Docusign, who is a cloud-based digital company. Okay, let's skip that. Strength in customer demand. Okay, international. You can see them in the U.S., Canada, some in South America, Australia, big time, Japan, big time, and Europe, big time. A little bit in India, a little bit in Norway, a little bit in South Africa, a little bit in Chile in South America. Okay, achieving. Okay, we skip that. Skip that for right now. Okay, Q1 2022 guidance. So this is what they're predicting for the next quarter. Total revenue 432 million to 436 million. Subscription revenue 415 million to 419 million. Billings 457 million to 467 million. Non-GAAP gross margin 79% to 81%. That's what we want to see that. We want to see that number grow. That's good. What else do we have? 22 guidance for the whole year. Okay. We mentioned this a little bit earlier. Total revenue for fiscal year 2022, the whole year, they're going to take a multi-million dollar company and transform it into a billion-dollar company. That would make DocuSign a what? What would that make DocuSign in the comments when they become a billion-dollar company? Leave it in the comments. What will DocuSign become? What's the word? A what? when they become a billion-dollar company. A unicorn, that's right. That's what tech companies, like to say about billion-dollar companies. Okay, so total revenue, $1.963 billion to $1.973 billion. Subscription revenue, $1.886 billion to $1.896 billion. Billings, $2.260 to $2.280 billion. Non-GAAP gross margin, 79% to 81%. So what they're predicting in the quarter of the gross margin between 79% and 81%, they're also predicting for the year 79% to 81%. So they must be really confident. I mean, confident about that. Let's see. Anything else we can dive into here? All right. All right. That's Docusign. All right. Let's go over to another company. Let's jump into Poshmark. Let's go. Their ticker symbol is POSH, POSH. They reported earnings today, and you can see this is their very first earnings report. So they were up a whopping 15.7% today, but in the after hours, they have lost 14.7%. That's not good. All right, so let's go to look at their earnings real quick. POSH, Poshmark. All right. Yep, they do slump. Okay. All right, let's see. All right. Poshmark falls after Q1 guidance arrives light of expectations. Poshmark is down. Yep, we know that they're down 14% in after hours trading, posting its first earnings report as a public company. Yep, GMV was up 28% to 387.2 million during the quarter, and adjusted EBITA was 4.2 million. Looking ahead, Poshmark expects Q1 revenue of 75.5 million to 77.5 million versus the 80.1 million the street says they should do. All right. Poshmark is still higher for okay, yep. They ran up 15% during the day, but then they fell 14% in after hours. So Q4 gross merchandise value increased 28% year over year to 387.2 million. Q4 total revenue increased 27% year over year to 96.3 million, and Q4 adjusted EBITDA was 4.2 million with 6.1% margins. Poshmark, a low margin company. All right, let's see. They're out of Redwood, California, leading social marketplace for new and secondhand style. Today announced fiscal financial results for its fourth quarter and full year. All right, the company posted net revenues. All right, we can dive in. Let's look at the details. Highlight highlights. Excuse me for one moment. Okay, fourth quarter. It's fine. Net revenue 69.3 million, a 27% increase year over year from 54.7 million in the fourth quarter. Okay, let's just go instead of the highlights, let's just look for ourselves. That's the easiest thing to do. All right, so we got 4 columns. On the left side, we have everything line item detailed, okay? On the right side, we've got 4 columns. Starting from the right, the first 2 columns are the full year. And then the next 2 columns from the right, column 3 and 4, are for the last 3 months, the 4th quarter, okay? The first column is for year 2020. Second column is for the full year 2019. Third column is for the 4th quarter of 2020. The fourth column is the 4th quarter of 2019. So, net revenue, 2020 for the quarter, and this is in thousands, okay? 96 mil 96 million. No, sorry. 96, this is in thousands, not millions. 96,054,000 a year ago. 2020, 226. Hold up. Hold up for a second. I read that wrong. We're in the millions, you idiot. Okay. Sorry about that. I misread that. Okay. So, for the 4th quarter, net revenue 69,317,000, up from 54,736,000. For the year, 262 million, up from 205 million a year ago. Now, how much did it cost to make that? So we go down to this next line here where it says total cost and expenses. So to make 69 million, they had to spend $67.7 million in order to make $69.3 million. That's not very good margins at all. Last year, same quarter, 69.8 million to make 54.7 million. So they lost. They lost. For the year, it cost 238.6 million to make 262 million dollars. A loss. They're not making enough. They don't have enough margins. And last year, for the year, 255 million to make 205 million. So at least this year, for the year, they brought in more revenue than it did a cost. So for their um, so they didn't lose money yet on this, but they did when you get to the bottom once you account for all the expenses. So we go down further, and then we get into the other one. Total for all the other expenses. Oh, yeah, okay. Total one, okay. Boy, boy, did they lose money. Net lost income attributed to, okay. Net lost income per share. Net loss, yep, yep. They need to increase their margins. All right, this is their balance sheet. So current assets right here. First line is cash. So for the year, they have 235.8 million in cash. Last year they only had 63.3 million in cash. And then we'll find liabilities. Look for the total liabilities right here. Total liabilities for the year 229 million. And last year it was 120.6 million in liabilities. So if they wanted to, they could take their total assets and pay off all of their debt. That's uh, a good situation to be in. But they need to get rid of some of this debt, some of this. They need to find a way to streamline a little bit better to get these numbers in line. They're not that great, really. Poshmark. All right, Poshmark. Let's go look at the. I mean, really, there's nothing to look at yet. The company has has just gone public not too long ago. This is their very first earnings report. So I mean, there's really nothing you can gauge yet. There's not a lot of history for this company to really say, hey, this is a good area, this is a bad area. But if we want to slap something on here, there is something in the middle right here. Let's put this line up. Okay. This line is right in the middle. And it's right in the middle of the stock being supported all through this area here, all the way back to January 21st of this year to February 22nd. For about a month of time, it was consolidating along this line, using it as support, and that was at $65. But then it broke down the 23rd of February, and it acted as resistance from then on out. And then, of course, like everyone else, March the 5th, it sold off to its bottom, recovered. But then this earnings report is just a mess. It's just not, doesn't have the margins that investors want to see. So this company is going to have to figure out something. It's got to figure out how to grow and how to cut costs. It seems as simple as that, doesn't it? But that can be complicated, especially for someone like Poshmark who's using secondhand clothing to try to make a profitable business out of it. All right, so that's Poshmark. Next one I wanted to look at is GoodRX and SHYF. Okay, so we've got um, coupons for prescription drugs, and then we've got auto sales to look at from SHYF Group. So first, let's go with SHYF. Their ticker symbol. All right, shift is SHYF. Hold on, let me just write that down. SHYF. Okay. Now let's see how they're doing. See, this is a company that would be compatible with Carvana if you wanted to measure and see how it does with others in the industry. All right, let's see what they did. Shift EPS, earnings per share, beats by 2 cent, beats on revenue. So that's good. Shift Q4 EPS of 27 cents, beats by 2 cent, and revenue of 171.5 million, and that beat by 1.09 million. But and here's the kicker, here's a negative. That revenue for the year was down 4.7%. So they made less, they brought in less revenue, and they were able to lower their expenses due to that. So that is a good thing. All right. So let's look at what they have to say, and then we'll go look at their stock chart. So full year EPS $1.05 on sales of $676 million. Business transformation drives full year adjusted earnings per share to $1.34, up 8%. Let's look at the highlights. Full year 2020 highlights. Okay. Wow, they make this a little hard to read. Sales of 676 million, a decrease of 80.5 million or 10.7% from 756.5 million. Excluding USPS order, sales increased 10.9 million or 1.6% despite pandemic-related headwinds throughout the year. Less people were traveling, less people needed to buy a car. Plain and simple. But they were able to bring some money in because they're a digital company. All right. Gross margin of 21.6% of sales, a 610 basis point improvement from 15.5% of sales due to the monument from the company's strategy to focus on higher margin products and actions taken to improve overall operating efficiency. Income from continuing operations of 38.3 million or $1.05 per share compared to 36.8 million or $1.03 per share. Okay. Generated 65.8 million of cash from operating activities, an increase of 31.6 million or 92.6% from 34.2 million and reduced debt by 65 million. See, that is a good thing, okay? That reducing their debt by 65 million is a really positive thing that they could have done, especially since they made less revenue, which means they sold less cars. Let's see. Consolidated backlog as of December 31, 2020 totaled 478.7 million, up 142.1 million or 42.2% compared to 336.6 million as of December 31st a year ago, 2019, reflecting continued strong demand across business units. So what they need to do is they need to get into more markets. All right, fourth quarter highlights. Sales of 171.6 million, a decrease of 4.7%. Income from continuing operations of 8.3 million or 22 cents per share compared with 40 cents per share. Let's see. Repurchased 300,000 shares of the SHYF Group common stock for approximately $7.5 million in the aggregate pursuant to the company's share repurchase authorization. All right. Purchase Purchased the F3 manufacturer MFG Inc. business, Duramag, a leading aluminum service body and accessory manufacturer of the well-recognized Duramag and Magnum brands. That's great. People get into accidents. It's common. It happens. Sometimes it's a tragedy, but accidents do happen. And they're looking to take advantage of that by having a body shop and a service shop to take care of the vehicles they sell. Sometimes that can be a lifesaver when you're in a down year or a down quarter where you're not selling as many vehicles. It is possible that you could be servicing a lot of vehicles and recoup some of that lost potential in service. So it's important when you are in the automotive industry, the boating industry, the RV industry, which let me tell you a secret. The boating industry and the RV industry are booming. I have first-hand knowledge that they are doing so. It is an awesome time. People want to get out. They want to take vacations, but they're trapped. They're stuck home with the vaccine and with the restrictions being lifted. That's good. People will be able to travel, but people may still be a little nervous to travel too far. So that's why they'll go buy a boat where they can be with their immediate family, immediate friends, and not have to worry about crowds of people yet. They can get an RV and do the same thing. So it's a booming business right now, the boating and RV business. All right, so let's see what else do they have to say about the quarter. By all accounts, 2020 proved to be a historic and transformative year for the SHYF group as we strategically aligned our product portfolio to take advantage of more profitable growth markets after the sale of the ER business. I am incredibly proud and appreciative of the tremendous efforts of our entire team. Yep, that's good. All right. So let's go and look at Shift's stock. And remember that ticker symbol was FHYE. Whoa, sorry, F, sorry. Ticker symbol SHYF. Shift Group Inc. Okay, let's go to 1 day, big picture, and then we'll go in. All right. All right, this is far enough back. This goes back to 2015. They had a rise. They kind of plateaued during 2018, and then 2019 they dropped, and then during 2019 they rose up again, and then we get to February, March of 2020, they plummet, but then after the plummet, then they rise. So that's what you see here. That sharp decline, that's when the pandemic started for Shift. Now, Shift was up 12.2% today, and in after hours, they've hardly given any of that back up. They are up they have lost 0.8% in the after hours. So they're holding that 12% gain today, and you can see that in that big green candle right there. Okay. Let's see. They even pay a dividend, which is nice. So they are on a very, very nice line. Look, let's put a line here. Let's put a line right here like this. Up just a little bit. Right there. So this line for Shift, it acted first as support, okay? And then it consolidated sideways, and ever since that consolidation sideways right here, and that is the 30th of June 2020, all the way through the end of July 2020. So for a whole month, they consolidated sideways during the summer, and then the line turned into resistance. As they went up, they bumped into resistance all the way until you get to today. Now, let's go in. Let's go to the 1 hour chart so we can get a better idea of what's happening right now. Okay, so big gap up, huge gap up right here yesterday. And then another rise today for them. They consolidated a little bit around lunchtime, around noon Eastern Standard Time, and then they rose up again in the afternoon. So they are on a tremendous run. On March 5th, their low was $31.31. And let's measure that rise from the March 5th low all the way up to today's high, that was a 23.1% gain for Shift. All right. So, as if more people are getting back on the roads, and if more people are going to travel by car and stay within their little circles, their little cliques, their immediate family, their immediate friends for the next several months, that's good news for Shift as people get out and start taking, mini vacations, short distance, not a staycation necessarily. They need to be able to drive maybe an hour or two away from their home if they have something like that available. Um, all right, so for Shift, they're on an upward and ascending trading uh, trend right here, so there's really not much to mark out for them. There's a couple places that we could. If we take that March low and just raise it up a little bit right here to the $32 mark, would that be right? Let's see. 32. Does that work? It's more like 31.50. Here, I'm gonna draw a line right here at 31.50. Okay. If I do that over to here, 31.50. Okay. That look right here where the line where the trend line, the ascending trend line converges with this support line. You can see that it was resistance, resistance, and then right here, the 1st of February, once it broke above this line at 31.50, support, 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 support. Okay. So this thing is going to the moon right now. I don't know when it's going to stop, but when it comes back down, it's going to be looking for support somewhere, and it could possibly find support right here. This is at 34.50. 34.50. There is support. Okay. Let's put that line there. Oh, up a little. All right. At 34.50, there is support. However, it's acted as resistance right here. It's acted as resistance, support, and then resistance again, and then resistance, support, support, support. So the last two times it's touched this line, it's acted as support, and then it just blasted right up. So when it comes back down, it is possible that it could come down, maybe around this $35, $34 range. Okay. And if it breaks below 34.50, then we're looking at support, maybe around $33 all the way down to 31.50. Okay. That's shift. All right. Let's do one more, unless we've got any in the comments. Give me one quick second here. All right. One more stock to go through, and that is GoodRX. They reported, and I have not seen their numbers yet because they reported after we went live, and their ticker symbol is GDRX. GoodRX. All right. So let's see. GoodRX stock jumps after landing as a hygiene best idea. Okay. Why is this news so old? They posted their GoodRx. Let me just refresh it one more time. They should have had their earnings. Why is it? Let me just take a look here. I thought for sure they reported at 5 o'clock today. Last reported. Oh, here we. Yeah, announcement date. All right. Their estimate EPS is a loss of 67 cents. The estimated revenue that the street says is 148 million. But I thought for sure. Let's see. Q4 2021 highlights. Yeah, I'm sure that this is it right here. Uh, yeah, Q4 2020 letter to shareholders, March 11th. Today is March 11th, 2021. Yeah, GoodRx helps Americans get the health care they need at a price they can afford. So they've got a mobile app, and you can go in and get discount on your prescriptions using their app. So they have over 25 billion of cumulative consumer savings in our prescription offering alone, a record number of monthly active consumers, a 2x increase in subscribers to their platform, new mail order and discounted telehealth services for GoodRx and GoodRx Gold. Gold is like their subscription that you can subscribe to. And extended multi-year partnership with Kroger, the nation's largest grocer. New manufacturer savings programs for brand drugs, growing revenue 4x year over year. Expanded telehealth services enabling patients in all 50 states to safely see a medical professional from their own home for more than 150 conditions, often at a price that is less than a typical insurance copay. That's good. I'd like to see uh, what that what that is exactly. I'm sure it's on their website. But you can't use them as, like, a general physician, to go see telehealth-wise. There's a list of different conditions that you can have, like, most popular, like a rash on your skin, simple things that they can telehealth with. And see, the big thing with GoodRx is Amazon bought PillPack, and PillPack was a medicine dispensary that you could have your doctor sends your prescription to PillPack, and then PillPack mails you your prescription, and it comes in your prescription is divided out into little baggies, and it has the date and time printed on the baggie for when you're supposed to take it. Amazon bought them, and at the time when Amazon bought them, GoodRx lost a big portion of their market share. And if we hop over here real quick and let's pull up GoodRx, ticker symbol GDRX, GoodRx, and let's just go back a little bit in time here. They had this. Let me get rid of this box. We don't need this on here. We know what happened. There was this big gap down right here, the 16th of November of the last year. This huge gap down. This is when Amazon announced they bought PillPack, and everyone thought, "Oh no, this is going to crush GoodRx. Amazon is going to take over." Well, not hold on, not so fast. What PillPack does and what GoodRx does are two different things. PillPack sends you your prescription, your medicine to you in the mail. GoodRx allows you to use a coupon to get a discount on your medicine. It's not the same thing. It's different. And I wrote a blog post. You can go to tickertimenews.com and you can read about lessons learned from Amazon Pharmacy and GoodRX, some title like that. But it was a good lesson for investors to learn during this time because as you can see, even though there was this big fear that, oh no, Amazon Pharmacy would ruin GoodRX, GoodRX did come back to the same levels. You can see it right here. If I draw this orange line out here, if I draw that out, what is that? That's at $48. If I draw that out to over here, $48 right there. And this was the consolidating area for them. If I draw this out, this is at $54. Oh, don't go all extreme up there. $54. All right. And then we come back in and we draw back in. Okay. So GoodRx did get back into that level, but has since slowly fallen because the whole market fell. And then you get right here, March the 5th at 11:20 a.m. Everybody who bought at the perfect time because that was the bottom. And since then, GoodRx has been rising slowly. I actually bought GoodRx back then too. But today, GoodRx was up 7.3% during regular session hours. And after hours, GoodRx has fallen by nearly 6%. So they almost gave up all of their gains. They're back down to $41 even. And that, I guess it's off of their earnings today. Investors didn't like what they saw. I still think it's a solid company. Um, Anything under $40 is a buy for me personally. Not financial advice, but just what I would do personally. Okay, so that's GoodRx. Let's just go back here real quick and let me just see if they've got their actual financials in here or not. I'd rather look at the actual financials instead of read their perfect framing for how things look. Okay, so this is for the whole year. Yeah, this is not for the quarter. This is for the whole year. So this is their balance sheet. Um, Current assets. All right, cash. 2020. They have 968.8 or $0.6 million in cash, and that's up from $25 million in cash. That is huge. That is big growth for their cash on hand. Total current assets over $1 billion in assets, up from 88 million a year ago. Um, let's see. Where's the liability side of things? Total liabilities 758 million, and that's up from 737 million. So they're in a good cash standing. I really do like this company. All right, statement of operations. This is where it's broke down yearly and quarterly. Revenue. All right. All right, so this looks good. All right, we need to wrap this up. Unless you have any ticker symbols you would like us to go over, please share them now in the comments. Remember, this show is for you, okay? I'm serious. Leave a ticker symbol, and if you don't know the ticker symbol, leave the company name in the comments, and we will break down that company, okay? We will look at the price action. We'll look at support and resistance. We'll look at chart patterns, quarterly financials, and top news for any ticker symbol that you leave in the comments. All right. Thank you guys for watching so very much. I do appreciate it greatly. One last thing before we go, smash the like button and click subscribe and join our family of investors. I really would appreciate that. That would be great. Smash that like button, click subscribe, never miss an episode. This was episode 3. I appreciate everyone who was here with us today. Also, check us out on Patreon, patreon.com/tickertime news. You can subscribe there to help our channel so we can grow, produce more content for you, because this channel is all about helping you. Also, check out tickertimenews.com for all the latest information. And for tonight, that is it. I will see you tomorrow after the market has closed.